10 a.m., 4-hour time frame, 1 power of 3 setup. Boom. Today, your entire trading changes once and for all. As you know me, I only trade 3 setups. One is the IFVG model, one is the Midas model, which happens during Asia for gold, and the third one, which is my favorite, is one setup for life. And basically, all you are doing is trying to catch a power of 3 move of the 10 a.m. 4-hour candle. Now, in this video, I'm going to teach you how you can identify the manipulation phase of the 4-hour candle and how you can profit off of it. And also, I'm going to teach you how you can identify the expansion phase. And then I will teach you how to catch that expansion phase without getting stopped out for no reason. All you need to do for this trading strategy is identify in which phase is the 10 a.m. 4-hour candle is in. Are we in a expansion phase or are we in a manipulation phase? Well, if you don't know how to identify that, well, this video is for you. Because in this video, I'm not going to hide anything. I'm going to teach you my entire one trading setup for life model in this video. I'm not going to hide anything. And pretty much for this strategy, you do not need daily buys. You do not need higher time frame analysis. It works every single day. And if you don't believe me, you're going to go and back test it yourself and then come back and comment down below if it worked for you or it did not. Okay, I'm not saying it is a 100% win rate strategy, but if you use this strategy consistently, you are going to see extreme, insane results. So without wasting any more time, let's get on with the video. All right, guys, so here's the entire strategy. And later on in the video, I'm going to give you guys a lot of examples. But first, you need to understand what exactly is the strategy. So first thing first, we need to know the basics. What exactly is a AMD or power of 3, right? It is basically consists of 3 phases. So the phase 1 is accumulation, where price consolidates, right? It accumulates orders. Then the second phase is manipulation, where price manipulates, sweeps out liquidity. And the third phase is distribution, where price pushes up towards the original direction, right? This phase, this fractal, it happens on every single time frame, 95% of the time. And our goal is to catch this expansion move to the upside, okay? Now, the problem that arises with this initially is that how do we know if we are in a manipulation phase or how do we know if we are in an expansion phase? And that is what I'm going to clear out in this video. I'm going to teach you everything. After, thousands of hours of testing, I've just found the formula that actually works every single day, okay? So, now this right here is a 4-hour 10 a.m. candle. 4-hour 10 a.m. Okay, so let's mark that out. Now, this candle, as you can see, it has a wick right around this area, and then we expand it up and we closed bullish as a bullish candle. Now, on a lower time frame, this is what it would look like, okay? So, we open here, so this is the opening price. Price accumulates, it then manipulates. So this wick around this area is the lowest point here. That is your manipulation move. And this push to the upside, which is also known as distribution, is when price closes as a bullish candle. So again, our goal is to enter somewhere around here or even around here. But again, the question arises, Faz, how do we know if we are in a manipulation phase or if we are in a distribution phase? Well, hear me out very, very closely, because what I'm about to teach you, no one really does in a clear way, okay? And a lot of people hide this information for their mentorships and their courses. So as soon as the candle opens, right, what you want to do is drop down to 1 minute time frame. 1 minute time frame. Now you want to mark out the opening price, okay, of that candle. It is very important. Now, the second step is you want to look for price to dip above the opening price or below the opening price. So you can see after the open, we dipped below the opening price, right? You can see. And then what we are looking for is a market structure shift. All right. Now hear me out. This is the market structure shift around this area. So we have a lower low, lower high, and then a lower low. That is a clear structure, and then when price breaks above it, closes above it, that is your market structure shift. Now, we might think at this point that we are in a distribution phase, right? But there's one more confirmation that you need, and that's what I call the power of 3 silver bullet. When this setup presents itself, when this criteria is met, this is basically confirming that we are in a distribution phase. So here is the step that you have to do. You want to go here, choose Fibonacci tool, and use your fib from the last low that was formed to the last high that was formed before the market structure shift, right? So we have a lower low, lower high, lower low. So from this lower low to this lower high, we draw our fib. Now, copy these fib settings. Okay, this is very important. Pause the video and copy these settings because this is very crucial. Now, you don't want to enter right after the market structure shift. As I said before, we need one more confirmation. And that is, if we close above the -1 of standard deviation, then that confirms us that we are in a distribution phase. So what you would do from here onwards on the 1 minute time frame, this is on the 1 minute time frame, okay? All we need is an opening price of the 10 a.m. candle, and then we can proceed on the 1 minute time frame. So again, if price dips below the opening price and we are coming from below the opening price, we need a market structure shift. Once we get the market structure shift, we mark out the low and the high, the last low that was formed to the last high, and then we are waiting for price to close above the -1. As soon as price closes above the -1, that is our power of 3 silver bullet. Now, what you want to do is mark out the closest PD array that formed near the price, and also the PD array that caused the break of the -1. So there could be a fair value gap here, and there could be one in the extreme. So what you want to do is utilize the very first PD array, because sometimes price will be very aggressive. It will tap into the closest PD array and then push up. Okay, but also sometimes price can retrace way deep into a PD array. So the way I deal with this is that if I take my aggressive entry here from the closest PD array, I would need to cover at least 2 PD arrays for my stop loss. So we have one PD array over here, which is a fair value gap, and then we have this extreme fair value gap. So I would put my stop below this. Now, I'm going to simply target the -2 or -2.5, and I need minimum 2 RR. Okay, if I'm not getting 2 RR till -2 or -2.5, that part of 3 setup in my eyes is not good, or that could be just a manipulation move. Now, similarly, this entire move could be a manipulation phase, but we can still utilize the manipulation phase to take our trade. As soon as price closes above the -1, right, that is your sign that we are in a distribution phase, most likely. It could still be a manipulation move, but when that happens, price is most likely to manipulate towards -2, okay? So you can capitalize on that as well. But 80% of the time when this setup is presented, where we close above the -1 after a market structure shift, and we are coming from below the opening price of that candle, right? Then that is a distribution phase most of the time. So again, you take your entry from the closest PD array, you put your stop below the 2 PD arrays. So that the first one is going to be the entry PD array, and the second one is going to be the PD array that is lower to your first PD array. So your stop loss is going to go around here. And then again, you can target 1 to 2 simply, or you can target -2, and that would give you 2.19 risk to reward ratio. Now, I'm going to give you guys some examples, and then I'll end the video. All right, guys, so here is example number 1. And you can see over here, we have a 10 a.m. candle. So you can see we had a wick to the downside and also to the upside, but we closed as a bullish candle. Now, our goal would have been to catch a trade somewhere around here. So first thing first, as soon as this candle opens, you want to mark out the opening price. Now you can do it on the 1 minute or 4 hour, it doesn't matter, but it is easier because you can see the time just below it. Now, once you have marked out the opening price, you want to drop down to 1 minute time frame, right? And notice over here very quickly. So first thing first, this is the opening price. We dip below it, right? And then we get a market structure shift around this area. But we never closed above the -1. So we are not in a trade yet. We are waiting for our rule to be met. So now we dip above the opening price. So we go up and then we get a market structure shift. And right here, again, if we use our standard deviation so over here, you can see that we went above and we broke the structure, right? So we are using our standard deviation from the last high that was formed to the last low that was formed before a market structure shift. And again, price never closed below the -1 of the standard deviation. But finally, what happens is we have this opening price dips below this gap, this opening price, right? And then we break this structure, okay? We break this structure. So what we are looking for is this fractal, okay? We are looking for this fractal or we are looking for this fractal. We are not looking for this fractal where we get a break of structure and we use our, standard deviation. We need this type of behavior. So we are below the opening price. We get a market structure shift. So now we're going to use our standard deviation. So from the last low that was formed to the last high that was formed before a market structure shift. And now we are waiting for price to close above the -1, which I call the power of 3 silver bullet. So over here, you can see that we closed above this -1. And which PD array caused this break above the -1? Well, we have these down close candle. And if you look closely, we have a volume imbalance as well. Now, you could have taken your entry from this volume imbalance, right? And I want to cover at least 2 PD arrays. So over here, we have an auto block, right? And which is also like a volume imbalance. So that is one PD array. And then below that, we have this fair value gap, right? So I'm going to put my stop here just to be on the safe side. And I'm going to target at least 1 to 2. So right here, -2 is a perfect target for for 3RR. Now, you're only going to go break even if that price hits like -2. You're not going to go break even before that. You're just going to let the probabilities play out, okay? And this is so simple, guys. Now, you could have, by using this technique, you have avoided a lot of fake outs. So you got a market structure shift here, you got a market structure shift here, but the real phase starts, the real distribution phase starts as soon as we close above the -1, okay? And then we utilize the PD array that caused that break, and then we cover 2 PD arrays with our stop loss. And that's how it is literally my most favorite trading model that I use every single day, one setup for life. Let's move on to the next example. All right, guys, so here's a second example. And in this example, I'm going to show you how you can capitalize on catching the manipulation move as well. We don't always need to catch the expansion move. All you need is a 2RR, and that's pretty much it, okay? So on this day, you can see I've marked out the opening price of this 10 a.m. candle. Now, if I drop down to 1 minute time frame, right, you can see that we have the opening price around this area. So we dip below this opening price, and then we get a market structure shift. But as you can see, we didn't close above the -1, but then we get one more market structure shift around this area. So you can see we dipped above it, and then we broke this low over here with this leg, right? Now, the next step is that we are waiting for price to close below the -1, okay? And I'm gonna, in the last example, I'm gonna give you the reason, the benefit of -1.5. Okay, keep watching because there's a secret to it. Okay, so now you can see that over here at -1, we closed below this level. Now that tells me we are either in a big manipulation move or a big distribution phase, and most likely it can be a distribution phase. But if it's a manipulation phase, you can still capitalize on that. So in this example, we closed to the -1. And one more thing, if you don't get entry before price taps into -2, the setup is invalid because from these areas, price usually reverses, okay? So we closed below this -1, and notice which fair value gap caused a break, right? So over here, what you can see is that we have this fair value gap that caused this break. So you can utilize that fair value gap to take your entry. Now your stop loss is going to go above the second PD array. So fair value gap is the first PD array. This auto block, this up close candle, this bearish auto block, you could say a fractal bearish auto block, you want to put your stop above that level. And then you can simply target it -2. And this would have given you 3.56 risk to reward ratio, guys. Like, do you guys understand the power of this strategy? Let's move on to the last example. All right then, so here is the last example. And you can see we have the 10 a.m. candle. So I'm going to mark out the opening price. And then I'm going to drop down to 1 minute time frame. Right? And then you can see that first off, we went above the opening price, but we never got a market structure shift. But then we dipped below the opening price, and then we got a market structure shift. Right? So now we're going to use our fib from the last low to the last high. And right here, you can see that we closed above the -1. Now, ideally, not sometimes, most of the time, I take my entry from a fair value gap that caused the break. Okay, so the only fair value gap that I can see right now is this around here, right? So now now you could have taken your entry from this fair value gap, and this is the first PD array. This auto block is the second PD array. So you want to always put your stop below the second PD array, and then you can target the -2. Okay, now when you're in this trade, you can either go for 1 to 2, you can go break even because we're getting 2.57 RR. So at this point, it is very logical to go break even. Okay, and then you can basically have this as your final target, giving you 1 to 4 risk reward. But now let's talk about the -1.5. If you miss out on the -1 trade, so probably you were not on the charts or you couldn't find a fair value gap that caused the break, well, what you can do is look for a break above the -1.5, and that is your second silver bullet. Okay, so as long as the -2 is not hit, you can look to take your trades. Now, notice here very carefully. Okay, now this is when we get a break. Now, unfortunately, we didn't tap into the fair value gap that caused the break before price hit this -2. But if you went a bit aggressive, what you could have done is you could have taken your entry from this volume imbalance. And right, again, guys, every trade is going to be different, all right? It's not going to be always like price goes up, breaks this, and then taps into the closing period and then pushes up. You have to play this very logically, okay? Now, I can tell you that it's going to, move from the first PD array, but you have to think about this logically. If there's a fair value gap here, and you can, sacrifice a little bit of risk reward, right? Why not take your entry from this volume imbalance, and then you can put your stop probably below, like let's say, guys, you can probably put your stop over here, okay? It doesn't matter, guys. And then you can target the -2 over here. And that's another 3 RR trade, okay? Or you could have scaled in. So if you're already in this trade from here, you could have scaled in, enter right here, and then you could have targeted the -2. There are a couple of more videos that I've made on Power of 3. Make sure you go on my channel and watch one setup for live trading strategies. And there are different ways to approach this Power of 3, but this is the simplest, the easiest version, okay? And it is very powerful. Thank you for watching, and comment down below if you are facing any issues with any ICT concept, and I might cover that in the next video. Take care, goodbye.